Three things that are impacting real estate in lending right now. This question came after a discussion I had with one of our local lenders and a buyer that we're working with. And it was really enlightening. And I thought this would be very important for you guys to understand what's actually happening in our real estate lending market, especially right now, because there's a lot of people that are looking to refinance and there's a lot of people that are looking to potentially buy their move up homes, and even people that are looking to buy their first homes. Everybody wants to take advantage of the low interest rates. So this was an eye-opener and some things that I didn't even know. So I thought, you know what, if I don't know it, then how are you going to know it? So that's why I love doing these videos. I hope you enjoy them as much as I enjoy them, because I like to make certain and give you value of what I'm learning at the same time you are, especially if it's new. So some of the three things. Okay, so the first thing I think you need to know is that lenders are tightening their guidelines. Okay, so we received something about Chase and about how Chase was only doing stuff for people that had credit scores over not 700, and they were also tightening some of their guidelines. Well, I checked with my lender, and sure enough, it's not just Chase; it's universal across the board. A lot of lenders are being a lot more cognizant of what you have as a credit score. So know that we do have ways of helping you get your credit scores up and things like that. You can still get a loan if your credit score is under 700, but the cost of getting that loan will be potentially higher, and it might not necessarily be as easy. So that's the first thing. So they are paying attention to your credit scores. Second thing to know is that loans have shifted. It used to be that if you were getting a loan, a VA loan or an FHA loan would actually be oftentimes less expensive and much easier to get. Well, it's kind of turned around. There's usually three different main types of loans, okay? There's FHA, which is the Federal Housing Authority. There's VA, that is available for our veterans. And then there is what's called conventional. So those are the three different types of loans that are there. Now, there's different types within those types, but those are the main ones, okay? So when you have a VA, you have to be a veteran and have a veteran status. FHA is Federal Housing Authority, and you don't have to be a first-time homebuyer for that. That was often used for people that may have had a potential credit challenge before, or they have a debt-to-income ratio that might be a little bit higher to buy a home, and things along that line. Those two programs used to have lower rates. Well, the conventional now is the winner. And the reason behind that is because when you have an FHA or a VA loan, both of those loans are guaranteed by the company that makes the loans. I know that's a little confusing, so let me step back just a smidge. Okay, so when an FHA or a VA loan is made, then usually the lender that makes the loan sells it to another person that actually is the one that you make the payments to, all right? Well, if a borrower has challenges with that, then the company that made the loan has to buy the loan back. That's the reason why they're not doing it right now, okay? Whereas with conventional, that's easy, and so those are still moving forward as well, all right? The third thing I want to make you aware of is that there are different loan limits, okay? There is what's called a conforming loan limit. There is a high balance conforming loan limit, and then there's a jumbo loan limit, all right? Each county has different loan limits, so I can't just tell you the number right now, because if you're in one county, it would be one amount. If you're in another county, it would be another amount. But if you're looking to get a loan, you can look and determine if you're getting a conforming loan, then it's going to be much easier for you, and they're doing things easier that way as far as qualifying for you, and the rates are really good in that regard. If you're doing a high balance conforming loan, then it costs you a little bit more, but you can still do that. It's the jumbo loans that are having the biggest challenge. So the jumbo loans end up being above what is conforming or the high balance conforming, and right now, again, because buyers or the banks aren't selling to each other, those aren't being made. So that's your three things. First of all, interest rate or your credit score makes a huge difference. Second of all, the types of loans are making a difference as far as FHA, VA, or conventional. And third, depending upon whether or not it's conforming or jumbo, will definitely impact the ability to do what you're doing. So if you have any questions regarding your specific situation, then please reach out to us, okay? I know it's a lot of information in a short little snippet of time. We try and keep these short and brief just to provide as much value as possible. I love the questions. I love being able to interact. But if you have additional questions, just comment in the comment line at my email, callkrista@gmail.com, call with a C, Krista with a K at gmail.com. Send me a text, 805-620-7355. Or just give me a quick phone call and pass this on. Okay, please tag this, subscribe to our channel, do whatever you need to do. Let's get this information out there so that we can all move forward in a good way. As always, have an amazingly blessed day. Bye.